reading from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Nashville. It's Thursday, February 11th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you are with us tonight from COVID, U.S. politics, and the world economy to clarity. This is CB3 Live. And I asked you guys last week to kind of join in and become part of the community, and I had 4 different connections with our audience this week. The first one I'm wearing. One of our viewers sent me this very cool tie. I'm going to kind of sit up in my chair so that you can see it. My wife's first thought was, wow, that's noteworthy. It's a piano keyboard. And this wonderful viewer actually has known me for, about a half a century and knew my birthday. In case you guys are wondering, it is the only birthday on the calendar, but it is not necessarily the last day of the month. But that's the first one, and you'll see some more contacts with our viewers through the program tonight. Real excited about that. So tonight's agenda, The Endless Enigma. Yes, that is a song by Emerson, Lake and Palmer. But it applies to COVID tonight. And then cranking on the earnings. I tell you what, it's just been a great earnings season so far. For those of you that are watching for the first time, please click on the subscribe button on our YouTube page and then click the little bell so you get notified when I go live. Also follow me on Twitter. I tweet every day, sometimes more than once a day. And also LinkedIn, Facebook, and really just about anything else out there. Every once in a while Instagram, but that's the main way to reach us. So Corona America, guys, I keep hoping I can kind of put this topic in the past, but it just won't let itself go. The green on the screen is even a better number than last week when I showed you this. The vaccine doses so far, 43 million, exceeding the total confirmed cases now by 16 million. That's good data. Less than 100,000 cases for the 4th day in a row. That is a big deal. So the news out there is that this latest surge, which I think ended in mid-January, is easing. The number of hospitalizations are easing. And of course, the news out there will tell you, well, it's just not sure, but it's going to be, the actual turning point. I think it is. I could be wrong, but the compiled data, which I only share a small portion of it with you because it would overwhelm you if you saw it all. But for the 4th day in a row, as I just said, 100,000 cases, less than 100,000 cases. Says the second here, but actually that slide wasn't updated. So it's actually 4 days in a row now. 10% of residents of nursing homes have received their initial dose of the vaccines, and that's a great thing. There's further good news, and I'll get to that in just a slide, but look at the graph here. So minus 35% is down from mid-January. I've seen enough stock charts to know that once momentum gets going in a direction, it generally continues. And that doesn't always have to be on a price series with stocks. It can be on something like a pandemic, weather, etc. I believe that we are past the worst part of this pandemic. Certainly the second wave. I do not anticipate a third wave, but obviously anything could happen there. But at least this second wave, I believe we are ebbing, and that's good. I have not shown you anything from the COVID tracking project, mainly because their graphs are so small, but I wanted to show you this. Either do a screen snap on it, or if you can just follow the right-hand side of each chart, weekly tests continuing to improve, weekly cases continuing to decline. So even if you can't see the numbers, weekly hospitalized down almost 15%. Okay, from last week, and then the weekly deaths down 6.5%. So all of those numbers moving in the right direction, and I'll continue to show you that data. Part of the reason why it's so important to get as many vaccinations with as high efficacy as we can is because it takes so long to get 3/4. That's the number that the CDC uses, Johns Hopkins, to where you're making a meaningful impact in society. So for Hawaii, 8 months, Connecticut, 10 months, New York, 17 months. So obviously if there's more than one vaccine, we now have two, of course, Moderna and Pfizer, then it can make a difference. And we talked last week about being able to use those vaccines in tandem to actually speed up the process. Well, now comes along Johnson & Johnson, not only with the test, remember that they've been in the news for months now, but their third vaccine could actually jumpstart this slower than expected vaccine rollout. Now, it's been a pretty amazing rollout considering the time frame. We're just at 1 year on this pandemic. And to think that we've already got maybe possibly 3 now. So Johnson & Johnson basically posited that their efficacy is only about 65%. So it's less, it possibly is a little less potent than the other vaccines. But what they're predicting is, you know what? This really could mean that you're going to need to get a jab every year, sort of like you get a flu shot every year. This could be the same sort of thing for COVID-19. There are other public officials, and I've just done a ton of reading this week, basically saying they think this could always be here in the population, much like a cold. I mean, I was getting colds when I was a baby, and I still get them at almost 66. I'm sure that's the case for you. We don't really know what the future is for COVID-19, but now people are talking like this thing was so powerful that it may not just dwindle out in the summer months in its second summer and go away. And so that's kind of sobering. On the economic side of this, though, the upward trajectory here is that Oxford Economics is showing they think that we're going to get back to what they call the pre-virus GDP path. So that's gross domestic product. You guys know that. Probably about the third quarter of this year, possibly the fourth quarter. There's other opinions on that, and you'll see that as we go forward. Treasury Secretary Yellen, who used to be chairman of the Federal Reserve, that's kind of a small world. It's kind of strange to see Treasury Secretary in front of her name. But she's thinking full employment by 2022 if a stimulus bill is passed, obviously. So that's a real hot potato right now. We'll get to that in the political section later on. But her statement basically was 2 years sooner than the Congressional Budget Office said just last week. So the data is moving really fast here. And I feel like it's important that you guys are keeping up with this because I have to be able to make wise decisions on how to invest for your portfolios because there's so many moving parts in society right now. So if the world is still battling polio, and those of you that are anywhere near my age, I still remember standing in front of Delaware School, for those of you that are in South Florida, and waiting in line as a 5-year-old to get my vaccine for polio. And it's almost been eradicated, but then it made a fierce comeback, apparently in Afghanistan and Pakistan. And basically the warning here is that we may just have this pandemic for some time to a smaller impact, lesser degree than we have right now. And that's just something we need to be prepared for. The reality is that the illness could well be here to stay. It could join the ranks, but drop to, 0.0 something percentage of patients that actually die from it. That would not be a surprise to me based on how long it has taken to make the penetration that we have right now. Again, as I said earlier in the program, I think we're in a good place on this second wave because I think from mid-January, we're not going to take out those peak numbers again. One of the challenges, and this is 3 weeks ago, I was saying this, these variants, okay, so these are variations of COVID-19. We're seeing the first case in the U.S. on this African first case reported on October 8th. The U.K. is just in almost panic mode right now with this second variant. But you also remember a couple weeks ago. I hope you guys are watching every week because there's just so much information changing every week. But the point is that these variants are being addressed in the vaccines. There are actually well over 100 vaccines in progress, just 2 that have been released, with Johnson now asking for emergency coverage. That'll make 3. But they're going to have to figure out how to deal with these variants too, and it's just going to take time. It's just simply going to take time. The CBO, so Congressional Budget Office, this is the data that was earlier represented with Janet Yellen. They were predicting, 21, 22, 23. She moved that up by 2 years. If we can get enough stimulus to get small businesses back working. And of course, that is really what needs to happen. We almost totally shut down this economy for a long period of time. History will prove if that was the better move than just letting things stay open, the Sweden solution, if you will. I'm not going to posit on that tonight. We really have to just wait and see how that plays out. Okay, another chart for you to see how GDP probably is going to return here. So this is from Morgan Stanley. Everybody's now predicting when we get back to what's called full employment and full GDP, back to the 2019 projection. And they're at the third quarter of 21 also. Is this a V-shaped recovery that I've been talking about for months and months now? Morgan's got their own here on this chart. So this section is meant to encourage you, even though the idea of having an endless enigma could be with us. There's still a whole lot of positive news, So how are you guys feeling about that this week? I'm going to check the message board over here, but here's our question for tonight in the COVID section. How long will COVID-19 be with us? Answer A, I don't really care. I've been vaccinated. B, forever. I think we're going to need to get yearly vaccinations. In other words, if you check B, you're thinking the Johnson & Johnson, that this is going to be a periodic, sort of like the annual flu shot. C, not long. The end is in sight, and then we're going to be fine. D, at least another few years, with a sad face. And you're welcome to type in E if you've got a different answer, okay? But anyway, let me check the message bar here. Hey, Nellie, how are you? Hey, Charles from South Florida. Thanks for the tie. Yeah, that's from, thank you for remembering Feb 28 there. Okay, always on key. Very nice, Tom. Very nice. I like that. Okay, maybe people will continue to wash their hands. I think hygiene has been changed forever. I certainly hope so. It costs so little, it takes so little time, and it helps us, okay? Good habit going forward. So, Tom, you're in agreement with that. See, an annual vaccination, that's what they're thinking. Hey, Dr. J, when you go to take a vaccine, take it orally. Sung to the name of orally. Very good. Oh, gosh, that's good, Doc. So I told you that some people reached out to me this week, and I want to just read this to you while you guys are answering this. So this came from a couple of our viewers, because I've been asking you guys to share your experiences. This is not just about me, pontificating every week, okay? So, Charlie, after much clicking, we found the Walgreens COVID site, and we got my wife into an appointment for her first and second shot. Well, she got down there, and she said, well, is it possible that my hubby can come too? And they said, well, yeah, I'd like to do both at the same time. So he came flying down there. So there you go. If you're a couple and only one person, makes the appointment, you might be able to squeak 2 in there, okay? So they got there, and she had her shot and got this, no pain at all. But he had sort of an after effect. 4 hours later, something really punched him in the arm, had to take Tylenol, 2 ibuprofen. So the vaccine affects everybody differently. The same people taking it at the same time. It's just the way it is. And their second shot's going to be the 9th of March. So thank you to that viewer for sending me that. And I'm sure the community appreciates it. So I see a lot of B's and D's on the screen. Okay, another D, C, I hope so. Yeah, I hope the end is in sight. BNC from Inova, thank you, sir. Guys, thanks for the replies. So the U.S. economy just cranking along. Look at the market. 15.6%. The Russell continues to be in the lead this year. The NASDAQ, a little more than half behind it, but way behind that. S&P, half of that, and the Dow, half of that. Obviously, that's rough math, but it's pretty amazing. You got to be in the right asset class. You just got to be. So CG up 13, almost 14% on the year. And this was the third contact. So I had one of my viewers who happens to be a client say, hey, what about that Generac Holdings? It was up 14%. I'm actually looking on my screen. It's almost 15% in the aftermarket. So thank you guys for looking in your portfolio and noticing this stuff. Pinterest was up 7%. Let's see, LRCX Lam Research up 8%. So, CG has had a good year. CG goes for these kinds of flyers. If you've never heard of Generac, they make generators. Okay, so I just thought, and I take flyers in CG. For those of you that are new watching the program, these are my actual accounts. These are the programs that my clients trade along with me. Okay, so Generac was an unusual pick for me. Generators, who's going to use those? Well, more people working at home. You can't have the power go out. Maybe. And it just kind of sat there for the longest time, and then just killer earning reports came out. So we're happy about that. Thank you to my client for noticing that and passing it on to me. SG just continues to stupefy really here. This is a 20%, 20 and a quarter. This is a good year return, okay? But this is just for the first 6 weeks of the year. Happy with that. You may not even recognize these tickers over here, but those are the ones that are leading and bringing along a lot of small caps. Why small caps? Because who's in the lead? The Russell 2000, right? Our small cap stocks. DG having a respectable year, 6 3/4 almost. Way ahead of the S&P percentage-wise, with a lot less risk than our stock programs, obviously. So the market value of the biggest companies in America, $8 trillion in 5 companies. Just astounding to think. Nowhere else in the world could this happen, guys. This is capitalism. Now, I've got my problems with each one of these companies, either in a political sense or the way they manage things, but to think that they could have gotten this big by selling stuff and services, you just got to admire that, whether you really like their practices or not. This is what the spread has been between the NASDAQ and the S&P. Ever since the pandemic kicked in, this dramatic move is the reason why you can't just throw money at the Dow or the S&P and say, well, we're going to be fine, because you see other asset classes there with the NASDAQ totally outperforming it. And the same thing with the Russell. See the Russell underperforming? You guys heard me just poo-poo the Russell most of last year. And then it just came on strong in the end of November, and it's continuing to do that. In a secular bull market, we need every single asset class to succeed. So we're cheering on the Russell, and that's where most of my SG picks are, in case you're wondering why that program is doing so well. So this is just, forget the data you can't see, but just look at the graph here. This is going back to 1988, the previous bull market just before the red. The red is a bear market. What happens in a bear market is the market just rotates along and it can't break out. Okay, this breakout, I wish I could put my cursor on the screen, but just take my word for it. When that breaks out is April 10th, 2013, and we have been in a bull market since that time. Now you could say, well, really, didn't it just start on March 9th, 2009, which is the bottom of that red space? No, because until it breaks out, if you want to go in and wager everything you have that's the low of the market, you have more courage than I do. We loaded up once we got past this correction. I can go into that more at another time. But the point is, we are in a secular bull market. And until something changes, guys, it's going to take a lot more than politics and a lot more than COVID-19 to stop that. The Russell 2000 up nearly 17% this year, the best start since 1991, 30 years. The microcap, which is like trading crypto, up almost 30% for the year. 1/3 of the Russell 2000 companies have reported earnings, 26 above estimates compared to just 23 for the NASDAQ. So definitely, if you wonder why you're seeing rotations in your programs, that's why. Economic indicators, what have I seen this week? I try to reduce these guys because there's just so much data here, but I just got to present it. Look at this. Private non-farm payrolls. The survey was for 7 actual this is in thousands, 174,000. Just a huge a miss, okay? A miss in this case is good. That's the black number over there. So jobs coming back, all right? Unemployment rate continuing to drop. The survey was for 6.7. The actual is 6.3. Remember, for unemployment, we want a small number, like golf. You want a small number for golf. We want a small number for unemployment. All right, jobless rate dropping, and at the same time, inflation not rising. So why would we be concerned about inflation? Because the Fed is spending trillions of dollars putting it into the economy, okay? And you'd think that that would be an inflationary risk, but so far it has not been the case. Both manufacturing and services pulled back at the beginning of 2020, and then manufacturing has actually exceeded the recovery over services. Why? Because people went back into the factories and started making widgets. But on the service side, we have so many industries that just have been shut down, especially in the large states. And we know what the states are, that just haven't been able to reopen. So it's just going to take a little bit longer on the services side. Durable goods, non-durable goods on consumer spending. You guys know that consumer spending, I tell you this all the time, is 2/3 of the economy. The other third is divided between industrial spending, corporate spending, and government spending. But if the consumer's not spending, it's not going to grow. Even though we had a little bit of a pullback here in the last week or so, it's still this V shape, okay? If you don't ever remember anything else, you got to remember V shape, right? So V shape recovery. All right, monthly bankruptcy filings. I don't ever show you this data, but I just thought, wow, this is fascinating. You would think the longer this goes on, that the more risks there are for those American families that are at the margin. And yet we are at lows for at least the last 10 to 12 years. Okay. GDP projection. U.S. continues to rise. China rising a little bit stronger, but honestly, I don't trust the data from China. I just don't. The rest of the world way at the top there, but look at, 18% of the total world GDP is the U.S. That's how integral and crucial we are to the world economy, which is why it's so good that all the previous stats that I've shown you are there and have come true. Go back to World War II, guys, and look at this deficit. Now, obviously, Franklin Roosevelt had to keep the economy going and spent on munitions and military and everything he could do to make sure that the U.S. won both wars, okay? And basically that's what's happening right now in 2021, spending. It's not as drastic as it was during World War II. At least it's not yet. And even if this $1.9 trillion does get through the House and Senate, which it looks like it will, they only have a narrow majority, the Democrats, but it looks like it's going to get through. Still, it's just what's needed to get us out of this. Remember what Janet Yellen said earlier. We can probably trim 2 years off that full employment if we can get enough stimulus in the economy. And if that's the case, then the prediction here from SunTrust, Daily Shot, and actually the Fed, it's about 5.5 for GDP in the first quarter of this year. I don't know that it's going to be that high, excuse me, but I think there's a pretty good chance that it's going to be close to that when the third reading comes out. If you go out 2 years, the initial projection from Bank of America was for 5.0. Now they're looking at 6.0. For next year, they were looking at 3.0. Now they're looking at 4.5. So why is this data so important for me to show you this? Because I want you to stay optimistic. Because a lot of America has stayed optimistic, even though this terrible time, and actually through the previous political situation, many Americans have stayed positive and they've stayed spending. Why is that so crucial? I just told you 2/3 of the economy is because of consumer spending. So this optimism is something we want to share. Every once in a while, I'll get a question on this, the minimum wage. And people say, well, it's got to be a great thing, right? How could it cut employment and reduce poverty? Well, because both entities happen. Some people will make that 15 and others will lose their job. It's not just an automatic, hey, all businesses, you have to pay $15. Well, there is another choice there. The businesses can actually terminate the employment and work the other people harder. And that is going to happen in some cases where there is a mandated minimum wage. I don't want to weigh in on this. I have a strong opinion on it, but I'm just telling you, when you see this in the news, that this is going to be something that Congress passes, it is going to benefit some and it's going to cause job loss for others. But this is an item, obviously, because that affects consumer spending, which is a place where we invest a lot, that we need to pay attention to. The Federal Reserve spoke this week, basically said we're going to keep low interest rates until further notice. They've been saying that now for over a couple years. They actually just ramped up that rhetoric this past week, and basically, said this is the way it's going to be. This is really cool. This is the fourth contact that one of our viewers made, and they were on a trip, and they said, "Have you ever heard of this place in Jekyll Island?" Well, I knew that's where the Fed met, so they took pictures of the actual room. They sat in this room for a presentation where the first Federal Reserve met in 1910. Those are the 6 Fed governors. There were only 6, and now there are 12. And then their charter on the right. You can't read all of that, but the point of this is, these are historical things that I probably wouldn't show, except that when one of our viewers who's keyed into the program sends me this, it lets me know that they're engaged in what we're talking about and what we're doing. So feel free to send stuff, and if I can make it work, I'll get it on the show. But this is America at work here. So telecommuting, this is a pretty big segment tonight. We've been talking about this really since March of last year. How affected is the market going to be when many, many businesses continue to keep their employees away from the office? It was as high as 35% in May. The number or percentage of employed people dropped. I guess at the low here, it was probably in June down to 20. Well, that's not true. In September. And it's ramped up just a little bit, but nowhere near where it was before the pandemic. So really, going back to work doesn't look like something that's in the future. And this is a trend I'm following very carefully because this is a very big domino. Domino on the screen, it falls, lots of dominoes move with it. These return dates, and I don't know about you, but I've got several children that are, I've got one child who's never even met his boss. And he's worked there for, quite some time now, but that's because they're working at home and they're happy with that. So this hardest question for corporations is, when is it safe to return? And from all over the country, this is a really big issue. I think it's one of the most central issues to the post-pandemic America. And I thought maybe it would be good to hear from one of the icons of industry. Who better to tell us about what he thinks about this work from home, environment than Mark Zuckerberg.
Products can sometimes get built in a matter of months, but culture is built day by day over years and decades. And I think it's really important to take a long-term approach to how we think about remote work.
Mark Zuckerberg here is discussing a problem on the minds of many business leaders. Research shows that when employees leave places with a high concentration of specialized workers, innovation is stifled. And as the pandemic continues, more companies are letting workers move far away from the office, sometimes permanently. So why is proximity important, and what are companies doing to adapt to their decentralized workforces? Over the decades, tech companies like Apple, Tesla, and Facebook opened offices in Silicon Valley, creating a hub of specialized tech workers. Business leaders and economists say that this proximity is key to the success of a new venture. Research from the labor economist Enrico Moretti suggests that when specialized workers live near one another, their companies gain a competitive advantage.
Places like Silicon Valley are very expensive because labor costs more, office space costs more. But they also come with a lot of advantages, and especially if you are in the innovation sector. There's a growing body of research that points to the fact that firms and inventors and innovators are particularly productive and creative in places like Silicon Valley.
In a recent paper, Moretti traced the migration patterns in patent filings of more than 900,000 scientists, inventors, and engineers. He found that when a worker leaves an industry-specialized city, that worker innovates at a slower pace.
In my data, I'm following the same person over time. I'm seeing an innovator or inventor in rural Ohio, in Cleveland, in the small place, in the small clusters, and I see how many patents they create. And then I see that person moving to Silicon Valley or Seattle or Boston. And what you see is that the same person becomes immediately significantly more productive.
Moretti says that on average, a worker in a city with many companies in their field will produce better ideas at a faster pace. But during the pandemic, people have left tech clusters like San Francisco, some permanently. Companies say that some employees want to be closer to their hometowns and families. Others are looking to save money. Though the median price for a one-bedroom rental fell in 2020, San Francisco remains one of the most expensive metro areas in the U.S. Over recent years, that's led to a migration from the Bay to places like Sacramento, Las Vegas, and Austin, Texas. Companies have had to reimagine how they'll keep innovating while their workforces spread out.
When you try to measure where innovation comes from, it's hard to force it. It's hard to tell people we're going to lock you in a room and you're going to be innovative.
For a decade, Laszlo Bock led people operations at Google. In 2017, he launched his own company, Humu. Humu develops products that influence worker behavior. It's headquartered near Alphabet's campus in Mountain View.
In my prior job when I was at Alphabet, we talked a lot about what we called casual collisions or moments of serendipity where people casually bump into one another. So famously, Google News, which is an aggregator of websites, evolved because following the events of September 11, there were two engineers standing in line in a cafe. One of them was complaining about how it's hard to keep up with all the news, and the other said I could pull something together.
Box says that these moments of serendipity are the building blocks of innovation, but they come most easily in person.
Bringing people physically together, and more importantly, emotionally together, is vital, a prerequisite for innovation.
Box says that innovation in the workplace comes from low affinity distance.
Affinity distance is central to innovation and productivity. It's that sense of closeness, of connectivity, of psychological safety that allows somebody to say, I've got a crazy idea, I'm going to try that. And the challenge with remote work is when you've been around people and hung out with them and talked about their kids and had water cooler conversations, you get low affinity distance. We get closer to one another.
Some companies prefer to develop those bonds in person, and others are leaning into the remote experience.
There's a handful of companies that are saying, we're just going to be remote forever. We're going to hire people wherever they want to be, and that's how it's going to be.
In the short term, companies are turning to their own products to build community. Facebook, for example, is adding workplace-friendly features to its Portal video conferencing product.
So we use our own product, our nudge engine, and it's great at finding those little moments where people can actually connect and be human and innovate.
Humu's nudge product sends messages to employees at specific times to encourage behaviors that boost productivity. For example, it might send a nudge that suggests changing up weekly virtual team bonding activities.
By changing the prompt or the type of event every month or 2 or 3 months, you refresh the experience and you help bring people together.
Other companies are cutting down on avoidable meetings and designing workflows that accommodate people who live in different time zones.
An example of this might be having a really, really clear problem statement in a Google document and a proposed solution to that, and having multiple people being able to weigh in on that document, giving comments on their own time, and then that being sufficient enough for the project leader to synthesize all that information and make the next iteration of that proposed solution.
Dominique Baillet shapes the employee experience at Coinbase, a San Francisco tech company that is now remote first. She says it's an opportunity to make the workplace more efficient for people who may have otherwise been marginalized.
Even if work environments had been remote friendly before, remote first creates a more equitable playing field to root out some of the systemic disadvantages of not being in the office when the majority of your colleagues are in the office.
At other companies like Facebook, corporate offsite gatherings could invert into on-sites for remote workers at headquarters. But Alphabet, for example, plans to have workers return to the office when it's safe. Surveys conducted by economists say that after the pandemic, about 25% of all full workdays will be performed from home. In the meantime, companies will keep revamping the remote experience.
So I'm curious, what do you guys think about this? Before I move on to the crypto section here, I know we're on a little bit of a delay, but type something in the chat here. What do you think about working from home? How many of you are? I know some people online literally have had to change their whole business plan. In fact, one of the viewers I work with every week in a video conference when we used to work in person when I lived in Chicago, but we got so used to being able to work over video that it just seemed seamless. So that when I moved to Nashville, there really was very little change at all in the dynamic of the working relationship. So let's just take a minute or so just to share here. Anybody have any experiences about working from home? Maybe doing social gatherings on Zoom. Are you zoomed out? And what do you think about the future for America if businesses just keep doing what they're doing, basically working, letting their employees work from home at least 25, 30%, 40% of the time. Some firms are, nearly 100% of the time. So, Dr. J, love working from home. I'm with you on that, my friend. So, anybody else? Dr. J is a professor at the University of Cincinnati. I don't think that's a secret. So I can see where not having to commute in there into Clifton would be an advantage. So anybody else? Again, I know I'm a little bit behind the seconds here, 2025 behind. Working home is great. Okay, you like that, Charles? Good. So there's an Ohio answer and a Florida answer. Anybody else? Working from home isn't that bad. Okay, support companies allowing that. Good. It is a limited effective. Okay. I'm not sure what you mean, Rex. Maybe clarify that. Hey, Deb, how are you? Job's completely remote, Deb. Okay, good. Deb Domagowski. Working home, great advantages, but so much to be gained by the human spiritual interaction. Yep. I hear you. And Nellie, my daughter spends all days on Zoom meetings. Yeah. But it's very different. And you know what? A year ago it was novel. Now it's not novel. Now it's just becoming more routine. So we will see how it goes. In crypto news, I'll try to make this section short, but there's just a lot going on. Bitcoin soared after Tesla said it expects to start accepting customer payments in Bitcoin and other cryptos, maybe even Ethereum. We'll see. There are actually thousands of coins out there. It's not just Bitcoin, and they all come under the hood or the umbrella of cryptocurrencies. Bitcoin certainly is the biggest, and it is the dominance factor. In other words, what portion of the total crypto market is Bitcoin? About 62% today. It changes every minute, actually. In a filing, 10K filing, Tesla disclosed that they updated their investment policy and they are now going to be able to hold alternative assets such as gold bullion, and cryptocurrencies. It's been a huge move in Bitcoin for sure. So I think that it's going to be something that you're going to see more of. MasterCard just yesterday rose to a 1-month high after announcing that they are going to support cryptocurrencies for payments on their credit cards. Now imagine if Visa and American Express do the same thing, which they will have to follow. Then you're going to start seeing situations where charitable entities, philanthropic entities. I actually was on the phone with my friend Dave at Fellowship and saying, so when's the church going to be able to accept crypto payments? He said, well, we're not there yet. But, it could get there, okay? And there are plenty of advantages to that. So just keeping you guys in the loop on that. And then finishing the section here, if you remember, quarterly earnings, and we're winding down now. As we enter March, it'll be not too long before the full earnings season is down. Still 168 companies left to report, but 83% are surprising to the upside. If you remember historically, that number finishes the quarter about 73 to 75%. So 83 is a significant bump from that. And I find that very, very encouraging. So what's your thought on cryptos? A, it's way too risky. B, sounds exciting for others. Or C, I want cryptocurrencies in my portfolio. I like acid reflux, losing my hair, risking a heart attack, and having my cardiologist on speed dial. I want you to know that Alice wrote that answer, not me. All right. So what else do we have here? I'm going to go back and answer some questions while you guys are filling out those answers. From Debbie Billis. There's two Debbies, so I have to be careful here. Depending on the work, I can see advantages to both. I think it's going to be a blend. I think whereas it just was a given that we were going to go to work and that those that worked at home were the anomaly, that's just not the case anymore. Life groups for our church just aren't the same. I hear you, Jimmy. Yeah, I definitely hear you. Sharing with coworkers, not as good. Yeah. Some of it depends on the type of work. It really does. In a collaborative environment, you can get zoomed out looking at all those faces on the screen for sure. Yeah, A feels trendy. Okay. Could be. Anybody else? C, you do want crypto, huh, Charles? Okay. E, well, Nellie just skipped D, so it's been fun to dabble in. My son has made a ton in Bitcoin. Okay, well, we've had a pretty good year this last week ourselves, so I hear you. A, but it will be a new way of currency exchange in the future. Yeah, I definitely think this is here to stay. It's not something that's a fad. I think digital currencies, especially when you see Morgan Stanley stepping up and saying that we're going to, take a real strong look at that as far as holding some of our stock in the Treasury denominated in Bitcoin. That could be really interesting. So in politics, without a doubt, the impeachment trial. So I need to just talk about this in the context of how it can affect investments. And how it can affect investments is not the dadgum idiot, sorry, shouldn't have said that, the dadgum stupid impeachment trial, which all of us know is not going anywhere. It's never going to pass in the Senate. What it is doing is it's taking the focus off of what needs to happen, which is a stimulus package to get this economy jump-started. And I bet deep down Joe Biden is really pretty irritated at many of the Democrats who are making this a priority when he's going, look, I just want to get America working again, okay? I just think it's a mistake. I really do. But it's going to be with us for another few days. It'll vote next week. The Senate will vote to acquit, and we'll move on. Again, not trying to make this a political show. It's not. It's a financial show. But this is a sideshow on what really needs to be happening in Congress, okay? Which is addressing COVID. If you just stay out of the way, this is my message to Congress, stay out of the way of business. Okay, business is doing just fine. And for those that thought, only business could do well under Donald Trump, that's just not true. Business is doing just fine, thank you, with or without a political involvement. So let's let business be business. Let's let the states take care of most of what they need to take care of without federal government intrusion, and Congress get back to doing what you do best, which are these major pandemic packages. Okay, sorry for the pontificating, but it needed to happen. So Republicans in 2016, very positive about business conditions. Look in 2020, after that election, after they lost the election, very dour. But I'm trying to say that the outcome is still, we just had 6 records in a row. We had a down day yesterday. We had an up day today. Market closed at another lifetime high today. So, guys, it's just pretty amazing here. Let me check the message board. You guys are sending a lot here. Okay. Deb Bellis. I, of course, may have been the last one to give up my 8-track. I like that. I wish I'd bought more Bitcoin earlier. There's still plenty of time, Nellie. Bitcoin's going to be with us for a while. Yeah, and you got the same line. Big waste of time and money. I'm not sure, Tom, is that referring to, the impeachment? Of course it is. Freak show? Yeah, you said it. I can't say that on my show, but you're welcome to. You guys are welcome to say anything you want here. Now's your opportunity, okay? And Rex is agreeing with that. So, guys, I showed you this chart last time. The numbers play it out. What do you see on the right where there's very high unemployment? Hawaii, New York, California, New Mexico, Connecticut, blue states. What do you see on the left-hand side? South Dakota, Kristi Noem, maybe the best governor in the country, except for, I know Charles thinks that Rick Santos is from Florida. But, basically red states on the left-hand side that didn't shut down. Guys, this pandemic is not going to go away anytime soon. We have to learn to deal with it. We have to learn to live with it. We have to protect ourselves. We have to keep our hygiene alert high. But we have to get back to the business and of being Americans. Okay, we just do. I can't tell you how different the environment here in Tennessee is compared to Illinois, where I lived for 38 years. Okay, but this chart is going to have to change, or you're going to see continued mass exodus from the large blue states where they're shut down and people can't work. Okay, all right. I thought about not putting this in, but I did. All right. I think the President Trump impeachment, and for the first time, you can have more than one answer, okay? Answer A, it should proceed based on the evidence. B, should proceed because it is a constitutional process. C, should never have taken place. D, it makes America look very bad. E, makes America look very good. And if you want to put an F answer in there, you can. But I'm just curious what you guys think, and we'll go on from here. So, just a lot going on, guys. So much going on in the economy, so much going on in politics, so much going on in COVID, and all of these affect our investments. It's my job to ferret this out and make the best decisions I can on your behalf. I think if you see the performance there, we're doing pretty well. And those of you that are clients know it because you got the statements. Again, I appreciated the one client this week that pointed out Generac. You know, I hadn't really paid much attention, even though I bought it some time ago, because it hadn't done anything. But boy, the earnings shocker today was just great. We got C and D, C and D, C and D, C and D, A and B. Okay. Dr. J, C and D from Deb Domagowski. Mostly C's and D's, but you know what? Everybody's entitled to their opinion. Anybody else? So I probably won't mention this next week. I think every one of us knows he's going to be acquitted. And then I'm hoping that, hey, Andre, good to see you. I was wondering if you're online. I'm just hoping that, America can get back to business here and we can put this stuff behind. You probably noticed the political section's been a little bit lighter since Joe Biden was elected. Mainly that's because Congress is evenly divided and because they're doing initially work that is not financially outcomed. Okay. So, A and B from Deb Billis. Okay, guys. So next week, all right, real excited to bring you Nashville rock star realtor Susan Thetford. She'll be with me for an interview. Haven't had an interview in quite a few months. She's been doing this for over 30 years. She's a lifelong native of Nashville. We're going to talk about the real estate market, not just here, but across the country. She knows about across the country, one, because she's been doing this for decades, but two, because many, if not most of her prospects come from California, New Jersey, New York, and Chicago. And I was one of those. So she knows what the real estate markets are like there, what real estate markets are like in Austin and Arizona, the competitors, so to speak, to Nashville. And I think you guys will really enjoy it. She will take questions. And I would just encourage you guys definitely to be here. Tell your friends, if you're thinking about buying a home anywhere in the country, you want to hear Susan's segment, okay? Monday is Lincoln and Washington's birthday, called President's Day in the markets. The markets are closed. There will be no Monday market mashup this Monday. I will be back a week from tonight with Susan and lots more information. Always like to close with 2 Timothy, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. And it's my deeply held belief, guys, ever since I started doing these almost a year ago, that we will not only survive this pandemic, this political acrimony, and these economic challenges, we will thrive, and that 2021 will be our best year ever in America. I have to believe that because that's what keeps me going. And I think it's in all of our best interest to believe that. It just makes us stronger, better people, better Americans. Okay? All right. So I'm looking over here in the message board. And what else do I have here? Let's see. Thank you for your support. I'm going back to work tomorrow. Hey, yeah, Andre, we hadn't asked. People asked about you last week. Would you recommend buying fractions of BTC or whole coins mainly? That's a great question. I actually don't know who MG2782 is. So this is a good question, guys. Those of you that are interested in cryptos. So yeah, I guess I want to answer this for you. If it were me, I can tell you what I've done. I have whole Bitcoins, but at 48 grand, it's not easy. You should buy fractions of Bitcoins. You really have to have some Bitcoin in your portfolio. So my recommendation would be I have 8 coins right now. So I have Bitcoin, Ethereum, and then 6 others. But divide it up so that most of the portfolio is in Bitcoin, simply because so much of the news is happening in that coin. Good question. If you want to follow up, my contact information is cb3@cb3.com. Guys, thank you for your kind words. Thank you for sending me your comments this week. I would encourage you to continue to tell your friends, tell your family about our show, about our community. It's just a great way to spend Thursday night. We talk to each other. We encourage each other. When one of our members got COVID, we encouraged him back to full health. And it's just a place to be optimistic about our futures, about America, and candidly, to just have a good time visiting with each other's. From Nashville, I'm Charles Brown, Portfolio Manager with CB3 Financial, where we don't just manage your assets, we become one of them. From COVID, U.S. politics, and the world economy to clarity. This is CB3 Live.